Welcome, everyone, to another deep dive.
Great to be here.
Today, we're really getting into something vital, I think, navigating this pretty volatile economic landscape we're in.
It really feels like things are shifting constantly, doesn't it?
Absolutely. So we're going to look at market predictions, some big global shifts, and maybe most importantly, what it all could mean for your finances, for you personally. Our source material for this deep dive, it comes from two really distinct conversations. First with Gerald Celente. He founded the Trends Research Institute, been doing it for decades.
Right. A very well-known voice.
Yeah.
Independent thinker.
And then a follow-up discussion we looked at with Brett Rentmester from Winrock Wealth Management, giving another perspective.
So kind of comparing and contrasting those views.
Exactly. The goal here is, cut through all the noise, try to connect some dots from these insights, and hopefully give you a clearer picture of what's essential right now.
Yeah, I think that's key. Because these sources, they offer a provocative view, definitely independent, on where things might be headed. Our job is to unpack the what's, and crucially, the why it matters for you.
Okay, let's dive right in then. Gerald Celente. 45 years tracking trends.
Yeah.
He comes out swinging with a pretty bold prediction. An AI bust. He says it's coming, and he draws a direct line back to the dot-com crash.
Wow. Okay, so like 1999, 2000, all over again.
That's the parallel he makes. He calls the AI trend an infant, only really born in 2022, just 3 years old.
Still very early days then, in his view.
Yeah, and he argues it's just too risky to pour all this money into its very first stages. He reminds us his Trends Journal actually predicted the dot-com bust for Q2 2000. He saw that rush of speculation then.
And he sees it again now with AI.
Precisely. He feels the markets today are, quote, artificially propped up, overvalued, sees a real disconnect between Wall Street and, Main Street reality.
Okay, so what's driving this AI speculation specifically, in his view? Any examples?
Well, he points to China's massive strides in AI. He notes they've got, nearly 70% of 18-year-olds in college now, compared to just 10% before they joined the WTO.
Huge jump.
Huge. And he calls their young population AI addicted. He even mentions a specific company, DeepSeek. Says they made powerful AI with just $6 million, not the hundreds of millions we usually hear about.
Interesting. So suggesting maybe the cost barriers aren't as high as some think?
Could be. He claims DeepSeek is now the most used AI in the world. His big worry, he talks about trillions of dollars being thrown at what he basically calls make-believe AI companies.
That is a really strong counter-narrative, isn't it? Goes against a lot of the hype we hear constantly.
It really does. It challenges that whole dominant story around AI.
So how does Rentmester respond to this? Does he also see an AI bubble or...
It's interesting. Rentmester acknowledges the concern, about valuations being stretched.
Okay.
But he sees it as part of a bigger picture.
Oh.
He blames it more broadly on what he calls the era of printing money. Says this has been going on since the tech bubble back in 2000.
So it's not just AI, it's the whole system.
That's his take. He says it just got magnified with the 2008 crisis, and then again with COVID. All this money printing, he argues, creates a kind of false pillar of support under valuations.
A false pillar. I like that phrase. So the idea is that without that constant flow of new money, things wouldn't look nearly as rosy.
That seems to be the implication. So if that pillar is false, what does Celente see when he looks past the market headlines? What are the cracks he's pointing to in the real economy?
Yeah, the stuff that's not discussed, as he puts it.
Right. Well, first off, housing. He says the cost of a house is up over 50% just since 2020.
Wow.
And here's a key stat. First-time buyers, they're down to only 28% of the market. Used to be around 40%.
So affordability is just plummeting for new buyers.
Exactly. And rents are soaring too. Then he really flags commercial real estate, CRE, calls it a key area to watch.
The office space issue, I assume?
Big time. Says office occupancy in the 10 biggest U.S. cities is hovering around 20%, which is way down, even from pre-COVID.
And lots of leases coming due, right?
That's the worry. Lots of 5- and 10-year leases are maturing, and he expects that to lead to widespread defaults on loans.
Okay, that sounds serious.
And it's not just offices. He also mentions U.S. warehouse space. Apparently, it's more vacant since 2014 because of overbuilding during the pandemic boom.
So multiple pressures on commercial real estate.
Yeah. And this connects to his next point, the banking sector. He predicts more than 3 banks are going to fail. He's obviously thinking about Signature, Silicon Valley, First Republic last year.
Right, those failures shook things up. He sees more coming.
He does. And he stresses, look, this isn't just the U.S. thing. He points to Germany, third largest economy in the world, right?
Mm-hmm.
Says they've been in recession for 2 years, going on to their third.
Ooh, that's significant.
And he sees other global signs, like OPEC plus producing more oil even while demand seems to be dropping. For him, that signals a global slowdown.
Okay, so a pretty bleak picture globally,
Hmm.
potentially masked by market highs in some areas.
That seems to be his argument. And then he throws in what he calls his wild card trend. First time in 45 years he's used that
The
term.
wild card, what is it?
It's amplified, he says, by the Trump card. He asserts, pretty directly, that Trump, if he wins, will do everything he can to lower interest rates.
Okay, based on past actions.
Yeah, he cites December 2018, claims Trump forced Powell to lower interest rates back then, and attributes the market's 22% gain in 2019 partly to that.
Interesting political angle there. How does that tie back to the economy being propped up?
Well, it feeds his core argument. The economy was already artificially propped up with trillions during COVID, rates at zero.
Right.
He basically argues they'll do anything to keep it afloat now. Quote, make up anything they can to prop this up. He even throws out ideas like the digital world now with stablecoins, or even hypothetically wiping out $37 trillion worth of debt with some new digital currency.
Wow. Okay, that's out there. Very speculative.
Very. It's a pretty radical scenario he paints.
But it does tie back neatly to what Rentmeester called that tug and pull, doesn't it, between the fundamentals and government intervention.
Exactly. Rentmeester talked about an addiction to that government money flow.
And Rentmeester also brought in a wider historical view, didn't he? Something about generational cycles.
He did, yeah. He referenced Neil Howe's fourth turning theory. The idea is that roughly every 100 years or so, old systems just stop working effectively.
And we're in one of those periods now.
That's the argument, a time that requires a fundamental rethinking of systems. He includes things like Social Security's long-term sustainability in that issues we know are there, but keep getting kicked down the road.
So huge internal pressures, maybe systemic shifts happening. How does Salente see this affecting the U.S. dollar's role in the world and, the whole geopolitical picture?
Right, this is where it gets really global. He talks very bluntly about the death of the dollar.
Whoa, strong words.
Yeah. He argues many of the BRICS nations, Brazil, Russia, India, China, South Africa, have just had enough of the United States' economic and geopolitical hegemony.
They're looking for alternatives.
That's the idea. He points out the dollar was down, 10.7% since the beginning of the year when that recording was made. Says it's the worst decline since 1973.
1973, that was a pivotal year, wasn't it? Yom Kippur War, oil embargo, U.S. off the gold standard.
Exactly. A time of massive global financial shifts. Salente thinks lower interest rates, which he expects, will just push the dollar down further. He calls it the beginning of the end of the dollar as being the world currency.
That's a massive claim with huge implications if he's right.
Huge.
Yeah.
Then he gets into tariffs. He says he believes in the tariffs.
Okay, why?
He uses a historical example from Kingston, New York, talks about how factories there used to thrive, supported a middle class, but then globalization hit. He specifically points to Clinton bringing China into the WTO in 2000, right after 9/11, actually. Says that led to jobs draining away to cheap labor overseas. He contrasts China's college enrollment then, 10%, versus nearly 70% now.
His point being that the West basically handed over its industrial base.
That's exactly his argument. Quote, gave them all the manufacturing and high-tech and heavy industry they never had. And he connects it to today, citing Trump's proposed tariffs, 100% on Russian oil, 50% on Brazil.
Which would obviously hit consumers here, right? Coffee, beef, orange juice prices.
Absolutely. It wouldn't be painless.
And what was Rentmeester's take on tariffs? Did he agree?
Rentmeester was more cautious. He acknowledged the complexity. He said, look, maybe tariffs could work if they replaced income tax entirely.
Ah, like a consumption tax model.
Kind of. But he questioned if they just end up being one more layer of complexity and tax on the system if you just slap them on top of everything else. Worried about unintended consequences.
Right, a fair point. The implementation details matter hugely.
Definitely. And then Salente links economic distress to something even more alarming.
Okay.
His line is, when all else fails, they take you to war.
Oof. That's chilling. Does he offer examples?
He does. Historical parallels he thinks are relevant. He points to Israel mentions the 39 weeks of protests over judicial reforms right before the Hamas attack. Says after the attack, the protests were all forgotten.
Implying conflict distracts from internal problems.
That's the implication. He also brings up WWII FDR seizing Japanese assets in '41 after Japan invaded French Indochina. The U.S., Dutch, English cut off like 75% of Japan's trade, 88% of their oil.
Leading to Pearl Harbor months later.
Right. He even connects the dot-com bust NASDAQ, down 80% to 9/11 happening afterwards. Again, suggesting a link between economic crisis and major conflict.
That's a provocative pattern to suggest.
Very. And he points to current events. France and Germany are building up their militaries now. Germany borrowing $1 trillion for it.
Yeah.
He calls his military buildup his greatest concern.
A global shift towards rearmament.
Yeah. And he ties it all back home to painting a really quite sad picture of the U.S. itself. Says it's rotting in front of our eyes.
Rotting? How so?
He gives examples like the state of the New York subway, compares it to Kolkata, mentions potholes, homelessness, argues the country needs a renaissance, like after the Black Plague.
Strong imagery.
It is. He laments that billionaires aren't funding peace or uplifting people, and he suggests talented people, capital, they're leaving the U.S. now. Not anymore. Are they staying? Implying America's losing its global appeal.
That's a heavy assessment. So, okay, wrapping your head around all these concerns. AI bubbles, recessions, CRE default, bank failures, dollar decline, geopolitical tensions, war. It's a lot.
It really is.
Yeah.
Which brings us to the inevitable question. What does this actually mean for your money, your investments, your financial future?
Right. What do Salente and Rentmeester advise, given their outlooks? Let's start with Salente. Where does he see opportunity, if anywhere?
Okay, Salente does have some clear bullish calls. Number one, gold. Very bullish. Calls it one of our top trends for 2024. Notes prices went up nearly 30%.
Gold has had a strong run.
Yeah, and he actually thinks if it weren't for crypto, gold prices would be probably a couple of $1,000s higher.
Interesting. What else?
Silver, he says, is also a good bet. And surprisingly, maybe, given his skepticism elsewhere, he's positive on Bitcoin and crypto.
Really? Even calling it invented on absolutely nothing.
Yeah, despite that caveat. He says he's been positive on Bitcoin for nearly a decade. He thinks political support, especially from Trump, alleging Trump got over $100 million from the crypto club, will help it explode. He sees continued momentum there.
So gold, silver, crypto. What about real estate? He was pretty down on CRE.
Right. He views real estate generally as a long-term investment, but he's very clear. It's not now for buying. He contrasts it with when he bought in 2012, getting 2.8% mortgage rates.
Very different environment today.
Totally. He says keep a close eye on commercial real estate, specifically. Watch for those failures, he predicts.
Okay, so that's Salente. Hard assets, crypto, caution on real estate for now. How does Rentmeester's advice compare? More nuanced, you said.
Much more nuanced, yeah. Especially on real estate and stocks. First, on precious metals, gold, silver, he basically agrees with Salente.
Okay.
Says they're long-term precious metals fans. Why? Because they tend to go up when everybody's printing money and devaluing their currency.
And he expects that currency devaluation trend to continue given the debt levels.
Exactly.
Yeah.
But real estate, he calls it much more nuanced. He agrees about the problems in CRE, the extend and pretend going on, especially in office space.
But he sees pockets of opportunity.
Yes. Specifically, things like build-to-rent communities and niche hotels. He really highlights that build-to-rent trend.
Why build to rent?
Because people want that single-family home feel, maybe can't afford the mortgage or want the flexibility. And it helps with labor mobility, makes it easier for people to move for jobs.
It's interesting niche. So still opportunities in real estate, just have to be very selective.
That's his view. And here's the biggest divergence from Salente. Equities, stocks.
Right. Salente sounded pretty bearish on markets overall.
Very. But Rentmeester strongly advises against going to zero exposure in stocks. He believes there are always pockets of value out there.
Even if the overall market is shaky.
Yeah. And he adds a really important warning. He thinks bonds might be the epicenter of the next crisis.
Whoa, not stocks, but bonds.
That's his concern. So he advocates thinking outside of stocks and bonds. Diversified, look at hard assets, yes, but also private investments and AI-related things. But he cautions against just chasing the AI megacaps. Don't just buy the biggest names blindly.
So a much broader, more diversified approach than just stocks and bonds.
Definitely. He makes a crucial point. He thinks the average American, particularly if you're nearing retirement, currently has way too much emphasis on the U.S. stock market, too concentrated.
Okay, that makes sense. Diversification is key in uncertain times. So wrapping this all up, we've really journeyed through a landscape that feels both concerning and incredibly complex, hasn't it? Full of these wild cards, Salente mentioned, challenging all the old models.
Yeah, definitely a lot to process.
We've heard these stark warnings, potential AI bust, a global recession maybe looming, driven by things like CRE issues and this unprecedented wave of money printing.
Hmm.
We've seen the dollar's dominance question and that really intricate, sometimes frankly dangerous link between economic trouble and geopolitical conflict.
That war connection is sobering.
It is, and yet, even amidst all that uncertainty, we found areas where both our sources see enduring value, whether it's, the classic safe haven of gold or maybe more strategic, nuanced plays in real estate and carefully selected equities.
This deep dive, it really forces you to think about the bigger picture, doesn't it? It's not just the numbers flashing on a screen.
No.
It's about why things might be happening, how incredibly interconnected everything is: economics, politics, technology, global relations.
Absolutely.
Salente finished his talk with a quote from Samuel Adams. He said, "It does not take a majority to prevail, but rather an irate, tireless minority keen on setting brush fires of freedom in the minds of men."
A call to independent thinking.
Feels like it. So maybe the provocative thought to leave you with today is this. In a world where, as Rentmeester suggested, systems might be shifting, where old systems stop working, what's your role? How do you navigate this? How do you understand it? Do you play a part in the rethinking of systems that might be underway? And maybe most practically, how does your approach to information, to your own investments, reflect this potentially changing reality?
A lot to ponder there. Definitely need to stay informed and think critically.
Indeed. Thanks for joining us on this deep dive.